Dr. Nagendra Babu sir, the Professor of Commerce, my teacher and my guru, for giving me opportunity to share my thoughts and understanding of IFRS to the participants. Dear faculty members, as the title indicates, understanding of IFRS, why we need IFRS today, and why this IFRS are known as global financial reporting standards. So these two aspects I wanted to cover. So, and what is the progress of IFRS so far in the entire world? So with this statistics, I wanted to share few thoughts to all of you. So this is what my flow of presentation. Flow of presentation is how our financial statements were prepared prior to IFRS, and why global financial reporting standards are required, and who are the supporters of IFRS, and what exactly IFRS stands for, and why do we call them as a global reporting standards. Again, what is the impact of IFRS from the perspective of global accounting bodies, and what is the progress towards global standards as on today, and what are the components of financial statements as per IFRS. Again, IFRS practices in India. Do we practice IFRS in India? Again, what are the criticism on IFRS, and which Indian companies are preparing the financial statements based on IFRS. So these are the topics I would like to cover in next 1 hour of my session. The first one about our financial statements.
Sir, sorry to interrupt you, sir. Sorry to interrupt you.
Yes,
Can you please go on full screen, sir, if you don't mind, sir?
Full screen.
Yes, sir, please. Thank you, sir.
Is it okay
yes,
now?
yes, sir. Yes, sir. Yes, sir. Thank you.
Thank you, sir. Thank you. Thank you. Our financial statements prepared prior to IFRS. Since all of you from the commerce background, you are also aware, before IFRS, every country were having their own national accounting standards. Okay. So US are having US gaps, UK were having UK gaps, India, we were having our own gaps. So African countries are having their own gaps. So this variation in accounting standards, or it is technically known as fragmented accounting practices, so made to have a lack of uniformity in terms of preparation of financial reports. So when there is a lack of uniformity, so we cannot compare the financial statement. Assume that I am a global investor. I wanted to make investment in US, or I wanted to make investment in European countries. So I don't know what are the accounting standards or financial reporting practices of UK, or you can say other countries. So when I don't know, my decision may go wrong. So that is the reason IASC, International Accounting Standard Committee, felt to harmonize the accounting standards in the year 1973 itself only. Just I'll come back to the diverse national accounting standard. As I said, so before introduction of IFRS, so fragmented accounting practices. Fragmented accounting practices means every country are having their own accounting reporting practices. So they were preparing financial statements accordingly. So because of this, what happened? There was a lack of uniformity in accounting practices of various countries. What are the key issues which are faced under this is lack of comparability of financial statement. Global investors, if they want to invest money, so they are unable to compare the financial statement because reporting practices are different. The approaches were different. And even lack of transparency. Much transparency was not there in the national accounting standard. So that is what I mentioned, limited disclosure requirements. So today for all the stakeholders, it is not only for investors, including employee, including creditors, financial institutions, they need transparency in financial statements. Again, earlier, focus on only on tax reporting rather than providing a true and fair view of financial performance or financial position to the stakeholders. Even it was very difficulty in terms of mergers and acquisition also. So it could be overvaluation of business, or it could be undervaluation of business. Say, for example, very popularly, Korean discounts. So in Korea, most of the companies were owned and managed by the family business houses. So they, there was a brand across the globe. So whenever any mergers and acquisition was happening, so they were telling that Korean companies are overvalued. So these were the issues with respect to national accounting standard. Even movement of capital from one country to another country also, it was very difficult. Why? Because there was no uniform accounting standards across the globe. That leads to a inefficiency in the capital market. So these are some of the issues which we are facing before introduction of IFRS. So the major accounting system which were there before pre-IFRS was US GAAP was dominated, UK GAAP was there, French and German accounting system was there in European system. Again, Japanese GAAP was there. So this is the background, how the financial statements were prepared prior to IFRS. Means every country were preparing their financial statement as per their national accounting standard. Because of this, there was a lack of uniformity and much transparency was not there, much accountability was not there. So these are some of the problems which we faced. Later, what happened? In 1973, there was a professional accounting bodies from Australia, Canada, France, Germany, Japan, Mexico, Netherlands, UK and US. So all these professional accounting bodies of these countries, so they agreed to form a IASC. IASC stands for International Accounting Standard Committee. In 1973, they formed in the month of June. The main objective of forming this IASC is to adopt IAS, International Accounting Standards. I'll repeat one more time. In 1973, professional accounting bodies of the developed countries formed IASC. The main objective of forming is to adopt IAS for cross-border listing. As you already know, what is that cross-border listing? Indian company get listed in American stock market. It's for better liquidity, for better marketability of shares, or to get the global shareholders to the company. So this is the main reason. So these countries wanted to have a cross-border listing. Hence, they formed IASC in 1973, and IASC has developed the IAS, International Accounting Standards. The main objective of this IASC is to harmonize the international diversity. Reporting practices wanted to be integrated. They want to bring the commonality. They wanted to bring the similarity in terms of financial reporting. So that was an objective of IASC. So from 1973 till the dissolution of this IASC, International Accounting Standard Committee, up to 2001, so nearly 31 international accounting standards were developed. Few of them are now also into practice. Wherever there is no IFRS, IAS into the picture. So that is the background of this. In addition to this, IASC, International Accounting Standard Committee, requested IOSO. IOSO stands for International Organization for Securities Commission. It is the regulator of the stock markets in the world. So they requested, so accept, identify or recognize the IAS for cross-border listing. So IOSO has reviewed the IAS, and in the year 2000, IOSO recommended the International Accounting Standards for cross-border listing. Once this IAS were recommended for cross-border listing, then IASC felt, so instead of being as a committee, it is better to be a full-time board. Hence, IASC members agreed to rename and to form a full board. That IASC is renamed as a IASB, International Accounting Standard Board. So this is the background of, before IFRS. I hope all of you are following.
Yes, sir. Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir. All of you are understandable?
Yes, yes,
Yes, sir. Yes, sir.
Yes,
Yes,
sir.
sir.
Thank you very much. So this is the, prior to IFRS, this was the situation across the globe. So IASC was developed and IASC started establishing the IAS. So now the question is, why do we need global financial reporting standards? So I have few points and I have a statistics for that one also. Why do we need global financial reporting standard? There are 5 points. The first one is development of world trade, emergence of MNCs, internationalization of capital market, expansion of the European Union, and internationalization of accounting profession. So today, so everybody says, only science is an international profession. It's not like that type. Even as accounting is also international profession now. ACCA programs are there, CMA programs are there. Just I will deal with the statistics. So development of world trade. Look at the statistics. In 1973, when IAS is formed, the global trade in terms of exports and imports, it is just 0.58 trillion. So in 2000, it was increased to 6.28 trillion US dollar. So year on year, look at the statistics. So 2022, it was 32 US dollar trillion. What I'm trying to say here, the world trade, if our exports and imports has to grow, we want, quality accounting standards. which brings the transparency, which brings the comparability, which reduces the risk, then only we can facilitate the trade. Otherwise, what happens? So if I want to invest money, if I want to do business in America, how do I identify the opportunities in America? How do I identify opportunities in UK? How do I identify opportunities in European Union? I can able to understand only through financial statements. Those financial statements should be understandable in nature, and those financial statements should provide true and fair picture, and those financial statements should be comparable in nature. Then only I can able to find out what are the opportunities which is available for the purpose of investment. One of the main reason here for integrating the reporting practices or why we wanted IFRS is because of the development of world trade. So even before 1973 also, so certain extent world trade was there, but this statistics is clearly indicating year on year it was growing tremendously. Hence there was a voice. We want uniformed, or you can say standardized accounting reporting practices across the globe. So this is the one of the reason why do we need global reporting standards. Second point is emergence of MNCs. Look at in 1960s, only 7,000 MNCs, multinational companies were there globally. Whereas as in 2018 statistics, 60,000 MNCs are there. So all of you know the operations of MNCs. So can you imagine the cost of preparation of financial reports by the MNCs if every country follows their own national accounting practices? The cost of preparation was too high. Hence, we wanted, uniform accounting standards. Hence, we want global accepted accounting standards. So this is another reason. So you can able to see the statistics like in 1960s, it was 7,000 MNCs, whereas in 1990s, 37,000 MNCs. Again, in 2004, 70,000 MNCs. Again, in 2006, 78,000 MNCs. It has come down in the year 2018, 60,000 MNCs with the subsidies of 5 lakh. So these MNCs gets operated, globally. Say, for example, in Infosys. So Infosys prepares now financial statements as per Ind AS, as per the Ministry of Corporate Affairs of India. And they also prepare financial statement based on the IFRS. So they got listed in the US stock market. And they also operate in different countries. If they start preparing financial statement according to their national accounting standards, then what could be the cost of preparation? What could be the time-consuming process? Hence, we wanted global reporting standard. So this is another reason emergence of MNCs needs global reporting standards. Again, internationalization of capital market. That's what movement of capital from one country to another country. So today, cross-border transactions are there. So we speaks about FDI. So now for Indian stock market, so a lot of FDI is coming, a lot of FII is coming. So most of the companies are investing money in India. So how do they identify the opportunities? By looking at the financial statements, by comparing the financial statements. So what is the return? So what opportunities are there? What could be the growth? So all those information they can able to get only through annual reports, only through financial statements. Hence, we wanted global reporting standards. I have the statistics for you. Cross-border listing in Nasdaq stock market, around 3,661 securities got listed. Out of that, 296 companies are non-US companies. More than 12 Indian companies got listed in Nasdaq for better marketability of their shares. There are currently 402 non-US companies that have their primarily listing on US stock exchanges. Say, for example, Indian companies, if we wanted to get listed in US stock market, so now in US gaps are followed. United States have generally accepted accounting principles are followed even now also. They are not followed the IFRS. But if any non-US companies wanted to get listed in the American stock exchanges, US has permitted to prepare the financial statement based on the IFRS. In majority of the countries, I have the statistics I'll show you in the upcoming slides. Any, company, if they wanted to get listed in abroad, so they can prepare their financial statement based on the IFRS. So this is another reason why do we need global reporting standards. The fourth one is expansion of the European Union. In 1958, only 6 members were there in the European Union. So today we have 27 countries, and probably all of you are aware about that. It could be for IAS or it could be for IFRS. The greater extent, the contribution is from European Union. And you also know that European Union dominated to the greater extent in terms of economic power. Again, 30% of the world nominal GDP contribution from the European Union countries. And they're the biggest trading partner to several countries like India and China. and a lot of free movement of goods are there, capital is there, people and services, and single currency for all these 27 countries is euro. And European Accounting Federation also supported for internationalization of accounting standards. Not only for IFRS, as I already said, even for the work of IASC, when IASC is developed the IAS, European Union, voluntarily they accepted, they started preparing the financial statement based on IAS. European Union concluded to follow IAS by European Union multinationals. Now in June 2002, all European companies listed and regulated market, they are following IFRS to prepare their financial statement. This is another reason, they wanted, global reporting financial standards. The last one is internationalization of accounting profession. So probably you know all about history of this. Accounting started in the place of Italy. Then it's moved to Germany and France and Netherlands. Again, in 17th and 18th century, the Britain played a major role. So later, US has emerged as a superpower. US Accounting Board, FACB, again IASB. They have a memorandum of understanding. Closely, they are working with an accounting standards. So later today, as I said, IFRS, International Financial Reporting Standards, ACCA, USCMA, all these professional bodies, they're focusing on IFRS, and a lot of demand is there, particularly for certification of IFRS students. It could be in the Middle East, it could be in the Western, even in the European countries also. So these are the 5 important reasons why do we need global reporting standards. In continuity of this, the next point is, who are the supporters of IFRS? Okay, look at the leading institutions in the globe. They are the supporters of this global accounting standards. The World Bank has been long-term supporter of work to develop a single set of high-quality global accounting standards. Even World Bank also wanted, globally accepted accounting standard to bring the commonality, to bring the uniformity in terms of reporting practices. Again, FSAB, Financial Stability Board, repeatedly it's supported for single set of high-quality global accounting standards. G20 leaders also, they also supported for this single set of high-quality accounting standard. European Commission, the first time all the MNCs of European continent, they agreed to prepare their financial statement based on the IFRS. They also supported. Again, Australian Accounting Standard Board, even they also supported, and they said there are a lot of evidence that IFRS has impacted positively on listed companies. Again, Korean Accounting Standard, very interesting is IFRS adoption affected positively in reducing investment risk in domestic firm, in mitigating the Korea discount. Korea discount is nothing but, so any investors other from the abroad, if they wanted to invest in Korea, they always feel that Korean companies are overvalued because of their national accounting standards. Because of this IFRS, so the Korea discount got mitigated. So they are very happy with the IFRS, and they can able to attract the foreign capital from overseas. Again, even bonds and a lot of mergers and acquisitions also took place. Again, Japan is also, where use of IFRS standards has been voluntary since 2010. Business efficiency, comparability, better communications to the stakeholders could able to possible with help of IFRS. So these are some of the leading agencies, reputed agencies, supported for single set of global accounting standards, that is IFRS. Then what is this IFRS stands for? Since you're also faculty members, you'll be teaching this, what is exactly IFRS. I'll not take much time here. IFRS are now global language of financial reporting. So today, this IFRS are considered to be a single set of high quality standard, and they are considered to be global language of financial reporting. What exactly this IFRS stands for? They are the set of accounting rules, standards that determine how accounting events should be reported in business financial statements, how revenue should be recognized, how property, plant and equipment should be recorded in the financial statement, how intangible assets should be recorded in the financial statement, how change in accounting policy should be recorded. So all these things get governed by this accounting standard, and which provides highest quality of financial information to the decision makers. Publicly accountable companies, it means those who listed in the public stock exchanges and financial institutions, are legally required to publish their financial reports in accordance with these agreed accounting standards. And these IFRS were developed by IASB. So as I said, IASC is renamed as IASB in the year 2000. From that year onwards, IASB took the responsibility of taking care about the IFRS as well as IAS. So this IASB is getting supervised by IFRS Foundation. This IFRS Foundation have two bodies. One is IASB, another one is IASSB, which is booming now. IASSB stands for International Accounting Sustainability Standard Board, that I will brief you in the later slide. So now we are speaking about only IFRS. IFRS are getting developed by IASB. This IFRS refers to globally accepted set of accounting, financial reporting guidelines for preparing and presenting financial statements, which ensures the uniformity in accounting practices that makes financial records comparable across different reporting entities worldwide. The summary, what I wanted to say here, this IFRS focuses on transparency, efficiency, accountability. I'm not telling that IFRS impacts on the profitability. There are a lot of research were conducted. IFRS impacts on the profitability, IFRS impacts on the sales revenue. So all those things, according to their perspective, they have proved it. But IFRS main objective is to bring the transparency in financial statement, to bring the efficiency in terms of preparation of financial statement, to ensure the management should be accountable to the stakeholders. So that is an ultimate objective or goal of this IFRS, Global Accounting Standards. So as again, objectives of IFRS creates a common law. As you know, most of the leading organizations, they were emphasizing on, we wanted a single set of global accounting standards. Yes, today IFRS has become a common law in terms of reporting practices. I'll show you the statistics. Nearly 90% of the countries are following IFRS or IFRS convergent standards. So that is the statistics. Again, which helps for analysis, for a decision making. When financial statements are transparent, definitely our decision goes in a right way. If financial statements are not transparent, our decision goes wrong. Even there is a possibility of losing our investment. There is a lot of risk is involved. Hence, this IFRS helps for the stakeholders' decision making. Again, this IFRS helps to prepare reliable financial statement. So as I said, financial statements are important. Those financial statements are whether they're reliable, whether they're accurate, whether they're true or fair. That's very much important. So this IFRS ensures and helps to prepare reliable financial statement, reliable financial records for the stakeholders. Again, I said, which helps to compare the financial statement between the countries, between the companies also, and a lot of transparency is there because they are given a lot of importance to notes to accounts. Even flexibility is also there in terms of reporting, which helps all the investors to identify the possible risk, okay, and identify the opportunities for a better investing. So these are some of the objectives of this standard. What are the benefits we get? So one is transparency, another one is uniformity, accountability, economic efficiency. Ultimate goal of global standard is to bring the uniformity, to bring the comparability. So by bringing comparability and uniformity, they also want to achieve the transparency. Means they wanted to minimize the errors. They wanted to minimize the manipulations, irregularity of funds. It is required. So this IFRS is helping for that. I'll show some of the research outputs of that. And uniformity, obviously now, including India. India, we are following Ind AS, Indian Accounting Standard. Earlier, we were following AS. That is what Indian gaps. Now we are following Ind AS. Ind AS are the converged standards of IFRS. So most of the standards are almost same. Deloitte has done a survey. What are the difference between IFRS and Ind AS? You can refer the document. Beautifully, they have analyzed. So where, differences are there. So a lot of uniformity can be achieved. Again, we can bring the accountability. So accountability is something, but who is accountable for whom here? The management is accountable for the capital providers, or we can say the owners. So this financial statements, this accounting standards ensures the management is accountable to the providers of the capital or the owners through preparation of their financial statements. Even economic efficiency can be achieved because, MNCs and all, they can prepare their financial statement as per IFRS They don't need to prepare financial statements according to the individual national accounting standards. Even cost of preparation also will come down. So these are some of the benefits which we get from the global accounting standards. So just I made an attempt from a few research papers I have collected. I have given the organization name as well as the title of the study. What is the research output? Even I have given the sources also. You can refer those sources about the outcome of these reports. World Bank, they did a survey, impact of IFRS. As you all aware, the main goal of IFRS is to bring the transparency, efficiency, accountability. So World Bank has found a positive result. The title of the study was The Effect of IFRS Adoption on Financial Reporting. So what was the result on transparency? World Bank agreed improved clarity and consistency in financial disclosure leads to a transparency. And they also agree this IFRS is impacted on efficiency, reduce compliances cost through standardized reporting. As I already said, assume that India have MNCs. In India, Infosys is an MNC. If it is working in 10 countries, if they're operating in 10 countries, so 10 national accounting standards will be there. Is it possible to prepare financial statement in all the 10 national accounting standards? The cost of preparations will be more. Even compliances cost will be more. Hence, it enhances the efficiency IFRS. Again, accountability, increased management accountability for financial reporting integrity. So this is what the World Bank research paper output. They agreed that IFRS has impacted on transparency, impacted on efficiency, impacted on accountability. Again, IASB, its own organization, has conducted a survey in 2016. The name of the paper was IFRS Global Application and Impact. Even they also agreed. So transparency got enhanced because of the international accepted accounting standards. Again, cross-border listing was there. Because of the cross-border listing, cost got come down in terms of preparation of financial statement. Again, they agreed it has enhanced the accountability, stronger accountability mechanism through mandatory compliances checks. Again, European Commission. So probably you are aware, in the year 2002 itself only they agreed. From 2005 onwards, we prepare financial statement based on IFRS. In 2015, they submitted a report, positive result on IFRS. Again, in 2007, they did a survey impact of IFRS on European financial markets. So they also said there was a greater transparency, which boosts the investors' confidence and market stability. And they also said enhanced efficiency in financial reporting processes across member states. Again, they said, accountability is also enhanced. Again, IFSC, International Federation of Accountants, their paper title is IFRS Implementation Global Perspective. They also said, significant improvement in the quality and comparability of financial statements, increased operational efficiency in audit processes, heightened accountability as firm as held to global standards. So these are the four papers outcome. Again, I have highlighted here another 4 papers. AICPA, again, Chartered Professional Accountants of Canada, Chartered Institute of Management Accountants, Institute of Management Accounts. 8 leading papers I have taken, and I have taken the outcome of that, and I am presenting for you. All this, 8 organizations in the research output, they have agreed, transparency is improved, efficiency is improved, accountability has improved as compared to the national accounting standards. So this is the research outcome of IFRS and related topics. Next is use of IFRS. So IFRS brings efficiency, accuracy, and data transparency to serve public interest for growth, trust, and sustainability of the world economy. Again, IFRS also assures the trustworthiness of a company's financial statement, which promotes decision-making and improves economy by attracting the FDI and FII, relatively which I have covered in the previous slides only. Again, importance of IFRS, as you all aware, which minimizes the diversity in accounting practices. So probably when we were doing masters, we were having syllabus of harmonization of accounting standard. What is that harmonization of accounting standard means? This is what integrating the accounting standard, having the single set of global accounting standards across the globe. So now we have minimized accounting practices across the globe, and this IFRS brings the quality and transparency in financial reporting practices, because this IFRS is considered to be highest quality of accounting standards. Again, investors, even other stakeholders, they can trust and they can rely on the company financial statements. They can take the decision for the purpose of investment. Even cost of conversion of financial statements, it could be preparation, it has come down. Even listing also becomes very easy. Again, provides cross-border acquisition and partnership. So from one country to another country, mergers can happen, acquisition can happen, partnership can happen, joint ventures can happen, alliances can happen very easily. Why? Because single set of accounting standards, which helps to understand the strength and weaknesses of companies which they wanted to acquire. So this is some of the importance which we are getting because of IFRS. And these are the IAS, International Accounting Standards, which were developed by IASC. Even today, it is into the practice. Few accounting standards got revised by IASB. If you referred IASB website, you'll get this complete details as well as materials. These are the 16 standards. IFRS 4 was repealed. Why IFRS 4 was repealed? In the place of IFRS 4, now we have IFRS 17 insurance contract. IFRS 4 was not fulfilling the objective of the requirement of the insurance companies and insurance contract. Hence, it got revised and the IFRS 4 got repealed. And now we have IFRS 17. So total we have 16 IFRS so far and 25 IAS, International Accounting Standard, which are in force. I'll repeat one more time. 25 International Accounting Standards and 16 IFRS were in force, which you can refer it in the IFRS website. So this is the IFRS Foundation structure. So IFRS Foundation Monitoring Board is there across the globe. Securities market head will be the member of this IFRS Foundation Monitoring Board. So below that, trustees will be there. This trustees gets appointed by the monitoring board. So there is a IFRS constitution only. This entire organizations work as per the constitution of IFRS Foundation. Below the IFRS Foundation, they have two boards. One is International Accounting Standard Board, that is IASB. Now, which we are discussing. IASB is responsible to set a IFRS accounting standard. Again, we have one more board, which will be booming in the upcoming years. That is International Sustainability Standard Board. That is ISSB. So we talks about SDG now, Sustainable Development Goals. Again, we talks about ESG, Economic, Social and Governance. How do we report that in the financial statement? Related to that, so IFRS Foundation has established one board called IASSB. They are working on IFRS Sustainability Disclosure Standard. So, but our focus is about IFRS accounting standards. Again, there is an interpretation committee which works under the IASB. Again, IFRS Advisory Council is there that gives the advice to the IASB. For all this, it could be monitoring board or for a trustees, IASB or interpretation committee or IFRS Advisory Council across the globe. Members are there from various accounting bodies. So this is about IFRS Foundation structure. So now, very important point which I wanted to cover here, progress towards global standards. What is the progress so far, which we are discussing? When IOSCO stands for International Organization for Securities Commission. It is the regulator of stock markets globally. They have recognized in the year 2000, this IAS for cross-border listing, recommended its members that they allow IFRS or IAS to be used on other exchanges for cross-border listing. Since that point, from 2000 onwards, this IFRS standards have gone to become the de facto, means global language for financial reporting, used extensively across the developed, emerging and developing economies. So now there is a survey which is conducted by IFRS Foundation only. According to their survey, as on today, the statistics which are given here, 146 jurisdiction. 146 jurisdiction means 146 countries now requires use of IFRS standards for all or most publicly listed companies. At the same time, further 12 jurisdictions are permits its use. So this is the statistics which is available. I have a slides for that. So these are the total number of countries survey which is conducted by IFRS Foundation. 168 countries data they have collected. They have analyzed whether they're using IFRS or not. So from European continent, 44 countries data is collected. From Africa, 39 countries data is collected. Middle East, 13 countries data is collected. From Asian continent, 35 countries. American, 37 countries. Total 168 countries data is analyzed by IFRS Foundation. And this is the outcome of that analysis, which I can able to explain to you. Status of IFRS adoption and convergence. Why today we are calling this IFRS as a global standards? Because out of 168 countries, 146 countries accepted this IFRS. So say for example here, Europe, there were 44 countries. Out of 44, 43 countries, here look at the heading, jurisdiction that requires IFRS standards for all are domestic publicly accountable entities. Out of 44, 43 countries requires IFRS for preparation of financial statements. So that is the acceptability of by the European Union. They are to the greater extent they contributed for the development of this IFRS, even in terms of funding to the IFRS Foundation also. Again, in African continent, 39 countries, out of 39 countries, 37 countries requires IFRS. Okay. Again, Middle East, out of 13 countries, 12 countries requires this IFRS. From Asian continent, out of 35, 28 countries require this IFRS preparation of financial statement. In America, out of 37, 26 countries. So therefore, as per this survey, 168 countries, they did a survey. Out of 168, 146 countries, they required IFRS for all the companies, or at least for a domestic publicly accountable, means publicly listed companies. Here, coming to this last two columns, jurisdiction that permit or requires IFRS standards for at least some domestic public accountable. It's nothing but not for all the companies, select organizations. 14 is there. So 146 plus 14, nearly 160 countries. I'm repeating one more time. Out of 168, 160 countries accepted IFRS, partially or fully. Hence, they are known as globally accepted standard. Hence, they are known as global language. Okay. So remaining 8 countries which I have listed here, jurisdictions that neither requires nor permit IFRS standards for any domestic publicly accountable entities. Only 8 countries are there. Out of that, even India is also there. I'll brief you later. So I hope you are clear with the statistics. Is I am understandable to all of you?
Yes,
Yes,
sir.
sir.
Yes, sir. Yes, sir.
Yes, sir. Yes, sir.
Yes, sir.
Is the statistics is clear to all of you?
Yes, sir.
Why IFRS is very much important today? Why we should integrate IFRS in our bachelor degree curriculum, even in master degree curriculum? Okay, means we should ensure our students learn how to prepare financial statements with the help of IFRS. Because globally, everybody is preparing financial statement based on IFRS. If we prepare or if we teach AS to our students, then how do they understand? How do they get the job? That is the reason we should integrate our curriculum, preparation of financial statement based on AS, based on Ind AS or IFRS. So this statistics ensures that the importance of IFRS now in the worldwide. Just made another attempt. Already I told the statistics, use of IFRS by reason. So Europe, Africa, Middle East, Asian continent, America. So majority of the countries are using. So just a few interpretation of that is 160 of the 168 jurisdiction have a commitment to IFRS accounting standard. A few, countries, they have not accepted, but they have agreed that IFRS accounting standards are single set of global accounting standards. Even in the absence of public statement, IFRS accounting standards are commonly used by publicly accountable entities or the firm. 146 jurisdictions require IFRS accounting standard for all or most domestic publicly accountable entities. Whatever the data I have presented with the name of the countries, I have given here the interpretations. Again here, 146 countries and plus 22, which I told you. Just I'll come to this 22 jurisdiction that have not adopted IFRS accounting standard. So this one I wanted to focus to you. 13 jurisdictions permit rather than require. So there is a difference. Permit rather than require means if they wish, they can use, but it's not mandatory. It is not required them to use. So those countries are 13 countries are there. Again, one jurisdiction requires IFRS accounting standard for financial institution, but not for the listed company. That is Iraq, which is mentioned here. One jurisdiction is covering its national standard substantially, but not entirely with IFRS accounting standard. That is Indonesia. Coming to our country here, 7 jurisdictions use national and regional standards, which I mentioned there. We have our country here, India. India not accepted IFRS as it is. India did the convergence. Convergence means, so we adapted the IFRS according to the nativity of our business environment. The converged IFRS is known as Ind AS. Now, which we have integrated in our syllabus undergraduation as well as in master degree everywhere, which we integrated Ind AS. Ind AS are the convergence of IFRS. Ind AS are not the convergence of IAS, International Accounting Standard earlier. They are the convergence of IFRS. So this is the interpretation of the previous table. Connecting to that one only. Here, just I mentioned here, few countries, even though they don't have a stock exchanges, they require IFRS to, generally what happens, IFRS is mandatory for a companies which they got listed according to the IFRS foundation. But few country, even though they don't have a stock exchanges, even though they don't get, their company get listed in the stock exchanges, but they made mandatory to use the IFRS. The reason is because IFRS brings the transparency and efficiency and accountability. So that is all about this slide. And G20 countries also, they said, G20 brings together finance minister, central bank governors from the following 19 countries, including European Union. They also made a commitment. All of the G20 jurisdictions have made a public commitment supporting a single set of quality global accounting standard. Which are the high quality global accounting standards today? It is IFRS. We have US gaps also. We have Japanese gaps. We have Ind AS. We have Australian accounting standard. All of them are not called high quality global accounting standard. Which accounting standards are called high quality global accounting standard? IFRS are called global accounting standards. So that is the reason G20 countries also supported. Again, the relevant authority in all the G20 jurisdictions have made a public commitment to IFRS standards as a single set of global accounting standard. Even G20 countries also supported this, and that is the reason we could able to get a very good success with respect to IFRS acceptance. Again, here in this point, 15 of G20 countries, in this 15, one Japan is there and 3 China, India, Indonesia, and another one is US. Just I wanted to emphasize here. Japan, what happened? In Japan, IFRS is also there. Japanese gap is also there. US gap is also there. Okay. Again, earlier IA is also there. There are 4 accounting standards in Japan. So IFRS standards on voluntary basis for domestic companies. As of June 2018, companies accounting for 33% of the Tokyo Stock Exchanges, they're using. As I said, they have Japanese gap, they have US gaps, they have IFRS, they have international modified IAS also there. Whichever they require, they can use voluntarily. That is with respect to Japan country. With respect to China, India, and Indonesia, have adopted the national standards that are substantially in line with IFRS standards, including China. So what we did the convergence. We not accepted as it is. Again, United States, even though United States FACB, US FACB, United States of Financial Accounting Standard Board, even though it closely works with the IASB, they have not accepted the IFRS. Even now they have their own US gaps, which are developed by US FACB. Okay. But non-US companies who wants to get listed in US stock market, for them IFRS is mandatory. So this is with respect to Japan and US and India and Indonesia. Just I made an attempt to show you that, GDP of the profiled informations, GDP of 166 profiled jurisdictions, 94,457 billions of US dollar is there. Nearly 44% of the GDP's countries, they're using IFRS standards. 49.2% of the GDP jurisdictions neither require IFRS or not permitted IFRS. The reason here, China, India, USA, they comes under the last category. Hence, 49.2% of the countries, they are not permitted or they are not required IFRS standards. So this is also one kind of analysis. The same explanation which I mentioned here. Again, this is in terms of listed companies, domestic listed companies use IFRS standards globally. So total number of companies got listed in WFE, World Federation Exchanges, is 53,959. Out of them, we could not able to get jurisdiction profile for 213. So 28,695 domestic listed companies, okay, they're using IFRS standards for all or most domestic publicly accountable entities. So they're using IFRS accounting standard. Again, 4,115. So they are permitted to use the IFRS standards. They may not required, but they are permitted. If they wish, they can use on a voluntary basis. Again, 20,936. That's from India, China, and US. Neither permitted nor required to use the IFRS for domestic listed companies. So this is in terms of number of companies analysis. So another important and interesting fact is here about SMEs. We have IFRS for listed companies separately. We have IFRS exclusively for SMEs. I'll repeat one more time. IFRS for publicly listed companies, IFRS for SMEs. So what happened? Even though they have developed the separate IFRS for SMEs, much acceptability is not there. So this statistics helps you to understand, out of 168, only 85 countries, the required IFRS for SMEs are permitted to use. Again, 12 countries, it is under consideration. They may or may not. 71 countries, they are not permitted and it is not under consideration also. For public listed companies, yes, it is required because shareholders are invested money there. It doesn't mean that, SMEs doesn't require transparency or efficiency, accountability, because banks lends money. Even here also, transparency is required, accountability is required, efficiency is required. Most of the SMEs feel that, this IFRS is quite complicated, even after revision of original IFRS exclusive for SMEs. So this is the point which I wanted to make very clear. In India, SMEs are not following IFRS. In India, even SMEs are not following Ind AS also. They are following AS. So this is with respect to the data. Again, what are the financial statements which we prepare under IFRS? So probably all of you are aware about AS, accounting standard, earlier AS. We are preparing trading account, profit and loss account, profit and loss appropriation account, balance sheet. So that is not the scene now here. Under IFRS, we prepare statement of financial position. Technically, it is known as financial position, which we are called as a balance sheet. Under Ind AS, so since we did the convergence of IFRS, so we permitted a use statement of financial position as a balance sheet only. Again, statement of profit and loss and other comprehensive income. There are two independent statements here. Statement of changes in equity, statement of cash flow. So now it's a need of the hour for our students to teach how to prepare these statements based on Ind AS, based on IFRS. That is the intention of delivering this session. So there are 5 statements we're supposed to prepare. First one is statement of financial position, statement of profit or loss, statement of other comprehensive income, statement of changes in equity, statement of cash flow. So same statements we prepared even under Ind AS also in India. What is IFRS practice in India? So as I already said, Indian accounting standards, Ind AS, are based on substantially converge with IFRS standards as issued by the board, ICAI. India has not adopted IFRS standards for reporting by domestic companies, has not yet formally committed adopting IFRS standard, but our Ind AS are on par with IFRS. That we can, boldly we can mention that one. And IFRS for SME standard is not required or permitted, and it's also not under consideration. I've shared the link that you can refer it, more information on that. Again, criticism on IFRS. The International Accounting Standard Board lacks transparency, legitimacy, and accountability. I wanted to underline here, international accounting standards promotes transparency, promotes accountability. The criticism here, the International Accounting Standard Board, IASB, lacks the transparency, legitimacy. Legitimacy is nothing but legality and accountability. To overcome this now, this IASB has made all those meetings, available to everyone now via online. So they are working on this, how to bring the transparency in the IASB board also. Not only in IFRS standard, even in board. Also transparency is required, legality is required, accountability is required. Again, it is not under the control of any democratically elected parliament or government. Say, for example, we have in India ICAI. Institute of Chartered Accountants of India. This is established under the Parliament of Government of India. But this IFRS Foundation, it is not under any control of any government. It's an independent, non-profit organization. So that is the another criticism which is done by Economics Committee. Again, more European representation and more public oversight is there. That is a fact because Europe is dominating in terms of funding also, in terms of acceptability, in terms of implementation. So European countries are there, hence European representations are there. So that is another criticism which we are finding. Again, most of the companies as well as countries says IFRS for SMEs is too complicated for the most. It has to be revised further. Again, we have another criticism with respect to fair valuation model. Fair valuation model is nothing but, see, in terms of banks, why in India, banks not adopted Ind AS because of this reason. Because fair value measurement is there even under Ind AS also. Fair value measurement says we should value our financial assets and all based on the market value, or you can say fair value. So this fair value depends on the market condition. Sometimes it may go up, it may come down. So when it go up, so financial statement indicates there is a more profit. When there is a more profit, obviously there will be a pressure to declare more dividend. But that profit may not sustain for a very longer period of time. Hence, in India, banks not accepted Ind AS so far. Now they are working on that. What should be the Ind AS for our banking financial statements also? These are the another few criticism on IFRS across the globe. Just I have mentioned here list of selected Indian companies who adopted IFRS. See, I have mentioned here Wipro, Infosys, Technology, Mahindra & Mahindra, Tata Motors, Bombay Dyeing, Reddy Laboratories and all. So these companies are Indian companies. They're supposed to prepare financial statements based on Ind AS only. They prepare financial statement based on Ind AS. In addition to Ind AS, they also prepare financial statement based on IFRS because they got listed in US stock market. That is the main reason. I'll repeat one more time. These companies prepare financial statement based on Ind AS as per the Indian regulatory requirement. They also prepare financial statement based on IFRS because they are listed in the NASDAQ market. If they want to get listed in any other stock market other than India, they must prepare financial statement based on the IFRS. So with this, just I wanted to show you a few, I hope the screen is visible. Is the screen is visible
Yes,
to all
yes,
of you?
yes, sir, yes, sir.
Yes, sir. Yes, sir.
Yeah, see, this is the
Yes,
Infosys
sir.
annual report. So here, key trends. So this
Sir,
part
it
is
not
based
No,
visible.
sir.
on,
No, sir. Close the PPT. Close the PPT.
just a minute, just a
Yes.
Thank you, sir.
minute.
Annual
Now,
report is not visible, sir.
You need to share the window, sir.
Yes,
I
sir.
hope
Now it is
I'm
visible.
Yes, now it is visible, sir.
visible, fine, thank you. See, this is the Infosys annual reports. Look at this. The first, this one is, it's purely it is prepared based on the Ind AS, revenue, net profit, EPS, market capitalization. This is based on Ind AS. Since since Infosys company listed its securities in NASDAQ, hence it has to prepare their financial statement based on IFRS also. Yeah, revenue, net profit, EPS, market capitalization. So based on IFRS, consolidated financial statements. If you refer their financial statement, you can able to understand. So Ind AS financial statement, again consolidated financial statement. But it's a mandatory for them to prepare their consolidated financial statement based on IFRS if they got listed outside the India. But those who are listed in India, for them, Ind AS is mandatory. So if you make, comparison, if you find out the differences, much difference is not there with respect to IFRS and Ind AS. Just few things I'll mention here. Say, for example, we prepare statement of profit as per IFRS. We supposed to prepare statement of profit and loss and statement of other comprehensive income. As per IFRS, we can prepare statement of profit and loss independently and statement of other comprehensive income independently, or we can integrate both together. Whereas as per Ind AS, statement of profit and loss account and other comprehensive income should be a single statement. So only small differences are there. Much differences are not there with respect to IFRS and Ind AS. Even in terms of presentation also, in IFRS, we're going to present expenses in profit and loss account based on the nature or based on the function. As per Ind AS, we identify the expenses based on their nature. So only few differences are there. Even, with respect to related party disclosure, with respect to calculation of EPS, as per, IFRS, only EPS can be calculated only for a consolidated financial statement, not for standalone financial statement. Whereas as per Ind AS, EPS has to be calculated for standalone financial statements also, even for the consolidated financial statements also. So again, this is Infosys report. This is Dr. Reddy Laboratories report. Extract of IFRS consolidated financial statement. They are prepared in terms of Indian rupees also. Statement of financial position. Again, income statement is there. Statement of comprehensive income is there. Again, I have just downloaded another Unilever Group, UK-based company. So they have prepared financial statement based on the euro currency only. So here, income statement, consolidated financial statement, statement of comprehensive income, statement of changes in equity, again, consolidated balance sheet, again, statement of cash flow. So what I'm trying to say here, so now for our students, so these are very much essential. This is the need of the hour. So much difference is not there. So we should not only teaching accounting standard, Indian standards for them, we should teach them how to prepare these statements. It could be standalone financial statement or it could be consolidated financial statement. So this is the important skill which is required. And there's a lot of demand is there for our students who has this skill, particularly in Middle East as well as Western countries. That is the main objective of this. So these are the financial statements which prepare as per the IFRS. Again, just have another report, Volkswagen income statement is there. Similarly, again, comprehensive income statement is there. Again, balance sheet is there. Again, statement of cash flow, statement of change in equity, statement of cash flows are there. So we are not finding any difference between components of India's financial statement, even IFRS also. Only few presentation difference is there. So that's what we are getting integrated. So with this, I wanted to conclude. Along with this, just I wanted to show this statistics also to all of you. Indian companies on US stock market. I hope it is visible. All these 11 companies who got listed in.
No, sir, not visible.
Not visible.
No,
Just-
sir.
Is it fine now? Visible?
Yes, sir.
Yeah. So this is 11 stocks which got listed in US stock market. These are Indian companies. All these Indian companies, they prepare financial statement based on Ind AS as well as IFRS. IFRS is mandatory for them. Why? Because they got listed in US stock market. Hence, it is a mandatory. Otherwise, they could have prepared financial statement only based on Ind AS. So these are the companies in India. They prepare financial statement based on Ind AS as well as IFRS. You can refer their financial statement. So when you go to that, you may not find much difference also. So that's about here. Again, we have a website of IFRS Foundation. All the details will get about accounting standards and all. IFRS accounting standard, complete details is available here. Again, another booming thing is about IFRS sustainability. So all of you heard about this SDG, Sustainable Development Goals. Every company now, they're focusing on sustainability standards. How to report that in annual reports. That's the point. For this IFRS Foundation has established a separate board. The name of the board is IFRS Sustainability. So far, 2 standards were established. Just I'll open that one here. So look at this. These are the 2 standards. IFRS Sustainability Disclosure Standards. General requirement for disclosure of sustainability related financial information, climate related disclosure. So another 5 years down the line. So probably this IFRS sustainability will have a greater extent demand. So we should train even our students on this IFRS sustainability reporting. Students who have this skill, they'll get a lot of employment. Even payment also will be very high. So that's about here IFRS. So this is the website of IFRS Foundation. Both the things is there. IFRS accounting is also there. IFRS sustainability is there. You can